Welcome to the Real Investing Show with Tim Herriage. Each day, we'll provide real investing for everyday investors. Tim is a nationally recognized real estate investing expert, podcast host, and public speaker. He built his businesses from the ground up and is here to help you do the same. Here is your host, Tim Herriage.
Welcome back to Real Investing. I'm Tim Herriage. Thank you for coming back. Today, Jacque writes, does investing in real estate result in potential tax benefits? Jacque, that's a great question. And for starters, I am not a CPA and I cannot give you tax advice or strategies. I've made just as many mistakes with the IRS as the next guy. I will tell you this. In real estate investing, you can legally deduct certain expenses from travel to equipment to supplies, the things that you use for your business, your office space. It's going to depend on how much you do it, when you do it, how often you do it. So you're going to need to get a good CPA. But we'll just talk about the properties. Rental property allows depreciation. So basically the IRS says if you pay $100,000 for a house, let's just say, and the land is valued at $20,000, the IRS believes in 27 and a half years, that $80,000 improvement that you purchased is worth nothing. So you can actually depreciate the entire home. There's other ways you can do cost segregation studies to identify the components of the property that the IRS says depreciate more rapidly, like carpet or the windows or the window coverings, things of that nature. And then you can actually do itemized depreciation, depreciate them in the right bucket. I'll tell you this, the most powerful tax advantage that I see from owning investment property is the ability to refinance. You use a lender like RCN Capital, you refinance the house, the property, and all that money you get is tax-free. Right, because it's not income, it's debt. But here's the funny thing. Let's say you refinance and pull $50,000 out of a house. Well, the best part about that is the interest is a deduction, right? That's a legitimate business expense. And the tenant of the property pays it back for you, right? So you get this money that's debt that you can use for the business and someone else pays it back for you. To me, and you don't pay taxes on the money, right? So if you need $50,000 to put a down payment on a house, you don't have to go make $50,000. You can just take it out of another house and then put it into the other, and then you have two houses. So yes, there are tax advantages, and I am not going to go much farther than that because, like I said, I'm not a tax advisor. But everything from your vehicles to the things it takes to operate your business. And then there's certain types of, once you meet a threshold where you're considered a full-time real estate professional, there's other benefits. But I recommend you check out David Richter, Simple CFO. He wrote Profit First for Real Estate Investing. Great guy, great book, great resource. Or just talk to your CPA. They should know how to depreciate property. Jacque, I hope that helps. Thank you for taking time to write in. If you're listening and you have any questions, hop on over to ihavelunchmoney.com. We'll see you tomorrow.
Thank you for hanging out with us today on Real Investing. If you have questions, comments, or feedback, please visit ihavelunchmoney.com. Tim can't wait to hear from you. We're always grateful for your reviews. And if you enjoyed this episode, please subscribe and share it with your friends. Remember, the business is the vehicle, not the dream. See you next time. The preceding program is provided for general education purposes only and does not constitute legal, tax, financial, investment, or other professional advice. No information contained in this program should be construed as financial, investment, or legal advice from any individual, author, host, or guest. You should always consult a financial advisor before investing.